We are learning a topic called claim for profit. Under the terms of fire insurance, a separate policy should be taken called loss of profit policy or
consequential loss policy.
Now, under this policy, what will be compensated? If you are met with a fire accident and because of the fire accident, if you lose that profits, you will be compensated. Now the question arises, sir, which profits will be compensated by insurance companies? Is it past or future profits? Future profits will be compensated. Question arises, why we lose profit? We lose profits because we lose sales. Insurance company will compensate which profit? Gross profit or net profit? Insurance company will compensate gross profit. Dear students, keep in mind, in loss of profit topic, gross profit means not exact balancing figure in the trading account. Gross profit here equal to net profit plus insured standing charges. First we'll learn what do you mean by standing charges. Standing charges means fixed expenses, common expenses for every business like rent, interest and depreciation are examples of fixed expenses. There will be many other fixed expenses. Those fixed expenses or those standing charges which are mentioned and covered in the policy is called insured standing charges. So here gross profit equal to net profit plus insured standing charges. Next question arises, how long insurance company will compensate? Can you tell the insurance company, Macha, I was completely disturbed and unable to do business for the next 3 years, compensate the claim for 3 years? The answer is no. Then how long the insurance company will compensate? Time taken to restore the normal business. This period is called technically dislocation period or interruption period or reorganization period or reconstruction period. A question may arise, sir, from which date to which date we call interruption period? Date of fire to the date up to which your normal business is restored is called interruption period. Example, on 1st September 2022, a fire occurred in the factory of RR Limited and the normal business was affected up to 31st December 2022. So business got disturbed for how many months, Nana? Business interrupted for how many months? September, October, November, December. So interruption period will be 4 months. How many months, Nana? 4 months. So compensation period will be interruption period or indemnity period, whichever is lower. Next question arises, sir, what do you mean by indemnity period? Indemnity period means period mentioned in the policy. Suppose in our example, the indemnity period is 6 months. So interruption period is 4 months and indemnity period is 6 months. Which is lower, Nana? 4 months or 6 months? 4 months. So the compensation will be paid for 4 months. We have to find what is the sales loss and gross profit ratio. Gross profit ratio equal to gross profit divided by sales into 100. Here gross profit equal to net profit plus insured standing charges. So of which year we need to find the gross profit ratio? Our base is previous year, Nana. Now we will look at the fundamentals of gross profit margin through some examples. Net profit 2,40,000. Turnover of last accounting year 40 lakhs. Standing charges out of which 80,000 have not been insured. Total 5,60,000. Insured standing charges total standing charges less uninsured standing charges. 5,60,000 minus 80,000 equal to 4,80,000. Gross profit equal to net profit plus insured standing charges. 2,40,000 plus 4,80,000 equal to 7,20,000. Gross profit ratio equal to gross profit divided by sales into 100. 7,20,000 divided by 40 lakhs into 100 equal to 18%. Example 2, net profit 2,40,000, turnover of last accounting year 40 lakhs, standing charges 5,60,000, out of which 80,000 have not been insured. Special circumstance clause in the policy allows for increase in the rate of gross profit by 2%. So insured standing charges equal to total standing charges minus uninsured standing charges. 5,60,000 minus 80,000 equal to 4,80,000. Gross profit equal to net profit plus insured standing charges. 2,40,000 plus 4,80,000 equal to 7,20,000. Gross profit ratio equal to gross profit divided by sales into 100. 7,20,000 divided by 40 lakhs into 100% equal to 18%. Stop the video and find out your answer. Due to special circumstance, gross profit is to be increased increased by 2%. Add 2%. Total how much, Nana? 20%. It is not 2% of 18%. It is straight away addition of percentage rate. Now that we have learned how to calculate gross profit ratio, we will look at how to calculate sales ratio. Computation of sales lost. Can you tell the insurance company the number you like? I lost 143 crore sales. You cannot tell the numbers which you like most. There should be evidence this much sales you lost. See, last year during the same period I have made this much sales. So then there is a evidence. We cannot guarantee that I will make the same amount of sales this year as I did previous year. May possible increase or decrease. There might be a trend number. Now, how we are going to calculate sales? Sales lost will be computed as sales during the previous year. The previous year means 12 months sales, sir? The answer is no. During the compensation period. Imagine compensation period 5 months. Then previous year how many months you take? 5 months. Now let us look at an example of how to figure out sales that have been lost. On 1st September 2022, a fire occurred in the factory of RRR Limited and the normal business was affected up to 31st December 2022. The indemnity period under the policy is 6 months. Turnover during the period of interruption was 2,25,000. Actual turnover during the period from 1st September 2021 to 31st December 2021 during the preceding year corresponding to the indemnity period was rupees 7,50,000. Dear students, find out the compensation period. Compensation period will be interruption period or indemnity period, whichever is lower. Interruption period is 4 months, that is from 1st September to 31st December 2022. 4 months, and indemnity period is 6 months. 4 or 6 months, whichever is lower. So 4 months will be the compensation period. Next one. Sales lost. Sales during corresponding compensation period of previous year. In simple language, what was our sales in the previous year from September to December? Those are sales, Nana. Actual turnover during the period from 1st September 2021 to 31st December 2021. How much? 7,50,000. So sales during the corresponding compensation period of previous year, 7,50,000. There may be increasing trend or decreasing trend. Add or less. We'll get expected sales. Sales which was expected in current year affected period. Less actual sales. What are the turnover during the period of interruption was 2,25,000. Less 2,25,000. We'll get the sales lost. But in technically we call it as short sales. We call what? Sales loss. Technical word is short sales. Dear students, in today's session we studied about the compensation period, gross profit ratio and short sales. In the next class I will teach you how to handle the problem in a simple manner. If you enjoy your classes, please consider subscribing for more content. Thank you. Bye for the day.